Hey everyone, happy Thursday, October 16th. It's about 9:15 in the morning on the West Coast, and it's time for another market update. We're entering week three of the government shutdown. I believe today is day 16. One thing that did happen yesterday that I spoke about last week is maybe something that would get them to end this shutdown was the military did get paid, so they got past that crisis because obviously neither side wanted that to happen. That would have been very bad politically, very bad for our military members not to get their pay. But the next one on the docket, as far as maybe this will get them all to settle down and come to the bargaining table and figure things out, is air traffic controllers. I believe they only got a partial paycheck a couple days ago, so the next time it comes up would be, I believe, the end of this month on Halloween, 10/30, 10/31 or so, where they maybe they're not going to get paid. So, if you're an air traffic controller, are you going to go to your job at that point? So if that starts having a major effect on air travel in this country, and we all know how important air travel is in this country for our economy, for businesses and whatnot, that could be something that maybe gets both sides to say, hey, people aren't going to be able to fly. We need to get this figured out. So right now, those seem to be, the military thing we got past, traffic control. I've heard talked about as maybe the next thing that gets them to come to their senses and come to some sort of resolution. But like I said, day 16 now and no end in sight. However, it hasn't been the worst thing for mortgage rates. Like we talked about, there's definitely been some job loss because of this. It slows down the economy. All those things are deflationary. All those things kind of, play in our favor as far as maybe in the future, this will cause, the Fed to keep cutting rates. So as far as that part goes, it hasn't been a bad thing, let's say, for mortgage rates. But overall, we don't want to see the government shut down. We want all the services opened up. We want our military members, our air traffic controllers, all these government employees to get paid that deserve to get paid. So next thing this week we got is, so I'm sure you've seen on the news, there's been some new strife with China. It started last Friday over, I believe, rare earth materials. China countered yesterday, I believe, with some new tariffs on us. So it's a little bit back and forth. On Friday, the stock market reacted very negatively because it's, oh no, here comes tariffs again. However, we got kind of a bump because the way, there's two different ways to look at tariffs. Is they're going to be inflationary and that's going to cause more inflation, which we don't want, or they're going to slow our economy down. And that seems to be the two different takes on these tariffs that people have. And right now, it seems like the markets are saying, hey, it's going to slow our economy down, which again, going back to kind of the government shutdown thing, that is something that's not a bad thing for mortgage rates. And then the other, thing that came off of these tariffs in China is that oil prices have dropped pretty dramatically. I think they're down to $58 a barrel. And part of that is that, basically the oil economy, the global economy thinks that if China and the United States aren't getting along, there'll be less global trade, which will be less global oil usage, which means, the price going down. So, the reason that's good for us is that, oil contributes a lot to inflation. Everything in this country at some point is on a truck getting delivered there. If it comes on a ship, it gets put on a truck or a train and then on a truck and then gets to its final destination. So oil prices going down is deflationary, is good for us as far as mortgage rates go. As far as all this government shutdown, tariffs and all that, I'll leave smarter people to analyze that. But it seems like, China and the United States are having issues just like, Democrats and Republicans are having issues. Next thing. So September CPI was supposed to come out yesterday, actually. We were supposed to get our first look at September inflation. Did not get that. But now they are saying they're going to release it on October 24th. And one of the main reasons they're actually bringing employees back to do this is that they need to do the cost of living expense, the COLA for Social Security. They need to figure out where inflation's at, how much money they need to earmark for people that get Social Security to get a little bit more next year. So that is something that they're bringing employees back in to do. But besides that, we're getting nothing. Initial jobless claims were supposed to be today. If the government had come back today, let's say, we would have got 3 weeks of initial jobless claims. We would have got retail sales. We would have got, retail sales and PPI, producer inflation were both due today. We would have got that BLS jobs report we missed a couple of weeks ago. So there's a lot of backlog data right now we're not getting, but we will get that September CPI here in next Friday. So that will be very important, obviously, because that's basically the only data we're getting right now on inflation until this shutdown ends. When the shutdown ends, and there'll be all this backlog of data will get released, and that obviously will be a pretty hectic and pretty crazy day. Next thing, so where does that leave us? The average 30-year conventional, like I said, it's kind of done better over this week with the shutdown continuing to go with tariffs. Last week when we spoke, I think we were at 6.36, and we're at 6.28 today, which is, I think, is the lowest since the Fed announced their rate cut, a couple weeks ago. Remember going into that, we were down to 6.13. After that, we left that at 6.37. So now being down below 6.3, close to 6.25, this is basically about as good as we've been since the Fed made that cut and, rates unexpectedly went up. Next thing. So yeah, important dates. So again, we don't have a lot of data come out. We don't know at least when this data is going to get released until that shutdown ends. Like I said, we will get inflation next Friday. And then the Fed is meeting on October 29th. At least they'll have some look at inflation here to take a look at, when they make their decisions. And then just giving you guys an idea, I don't have any other charts to share with you because there's no data right now, but let's take a look at like where the markets expect, the Fed to go coming up. So the first one is that October 29th meeting. Right now, they have a 96.7% chance they'll cut, just a little bit over 3% chance they do nothing. So right now, the markets are pretty confident that we're going to get a cut of about 1/4 point on the 29th. Right now, I know this morning, Fed Governor Waller said he supports a cut of 25 points. Fed voting member Mirren, he said he wanted 50 point or a 50 bit cut, which probably is not going to happen. But again, I like that people are thinking that way. Next meeting we got is December 10th. So this meeting right now, the markets have it at 0.1% chance nothing's happened. We're still where we are right now today. So October meeting happens, December meeting happens, nothing happens. They have it about a 6.4% chance we've only go down 1/4 point, and they got a 93.5% chance we'll cut twice before then. So more than likely that would be a cut in October and then a cut at this December meeting. Again, that's what we want. We want them to keep cutting. This would be a good, besides it going down even further, this would be a good result for us. And then one last one, the first meeting of 2026 on January 30th. Right now, they have that. Basically the markets think we're going to come down. We'll either be 1/4 point down is only 3%, and then it's about a 50-50 split. About 45% of the people think we'll have come down 2 cuts by that point. Over the next 3 meetings, they'll cut twice, and then over 50% think they'll cut 3 times in 3 meetings. Which again, that's what we want. The more cuts, the better. The more they cut, the lower mortgage rates will kind of tag along with it. Again, like we talked about, they're not directly correlated, and mortgage rates do not wait for this to happen. But the more the markets get pretty dialed in that this is what's going to happen, that they're going to keep cutting, is when we'll see mortgage rates keep to come down. So it's good to see that the markets think that. And like I said, a lot of this has to do with the shutdown. It's the slowdown of our economy, and the slower our economy is, the more likely the Fed is to cut rates to stimulate our economy. So that's it for today, guys. Like I said, not a lot of data, but it's good to see that, mortgage rates are kind of trending lower still. So let's hope the government gets it figured out, and I'll talk to you guys next week. Thanks a lot, guys.